Hey everyone, Nick Shaheen here looking at Spotify. This is a follow-up to a comment I shared with friends recently. When Spotify spiked on the weekly chart, they asked me if I had an update on said chart. So let me see. I think here's the weekly on Spotify. It was on the spike right here, and I had marked it up in all kinds of different ways, and I said major turning point, major pivot point around P, and I noted P somewhere around here, this zone, and sure enough, this is where it failed. But there's more information to, and then the next question was, do we see 150 next? This is on 11/25, after it closed up 0.7%. A pretty good day, but the markets just set all-time highs in a big way. So, 0.7 is good, but in relation to where it was, Spotify is not a shining star, so to speak. Although a good day, I don't want to diss it that way. But for me to expect higher prices, like 150, I would want to see some milestones ahead of time. So let's mark it up a little bit here and see if I can backtrack into that pivot point that I had noted in my conversation. All right, so let's see here. I'll bring a scratch pad and see if I can backtrack into it. At the time, somebody probably asked me, is this a good time to chase it? I'd say, one would chase it, but you have to account for the fact that this has been a difficult zone. If you want to pinpoint another zone would be up here. Sharp, clear failure at 160. And a zone anything above 150 has been difficult. And you look at here, probably that's where I noted P to be. Good news down here. It's nice support base. Failed. They went into this and eyeball. This is about 50% of this whole dip, right? So we'll check it from Fibonacci. So this line extends itself, and this little doji candle weekly. This is a whole week. What is a doji? It's when the market opens and then it rallies and then it sells and then it goes back and closes about where it opens, because they say, wait a minute, I love it. No, wait, I hate it. No, wait, you know what? I don't know. Let's go back and close it exactly where it was. Complete indecision. Doesn't denote the direction they're from after, but whatever happens is going to have like twice the effect, because they figure it out and then they head that way faster than normal. So in this case, we had 4 weeks down since the comments I had on it. So now the question is, should we expect 150? Well, we could. And if we do, then I would buy it above 150, because then it looks like a cup and handle of sorts. But I need to see what's going on in here before I can answer that. But first I wanted to address the fact that this is an R zone. So you know how they say prior support becomes forward resistance. Prior support has become forward resistance. So now onus is on the bulls to prove that they can bust through it and then use it as support so they can do this. So once they get the support, they fail. They don't go through it like butter. They fail. They come back to it. Maybe they fail again. And then once they go above it, they go back and test it for support. So they can flip that. S, support, becomes resistance. R, then becomes support again. That's the theory, right? Okay, so let's talk about Fibonacci just for giggles. A lot of people diss all of this stuff. It's the more machines trade, the more the stuff is going to hold true. This is 50% exactly. So Fibonacci, people who like Fibonacci, they're not that wrong. It's a rule because it does happen. Whether it's a self-fulfilling prophecy or not, who cares? It does happen. Just trade it. Why argue with it? So in essence, sorry, I got a phone call. I was saying in essence something. Regardless, I need to see what's going on inside this one candle to determine whether I should anticipate 150 or not. So in this case, I'm going to drill down. So the logical drill down would be just one day versus a whole week. So this is a daily chart for about a year's worth of data. And you can see that it's ping-ponging, it's going back and forth inside of a large range. So they went here to that difficult zone, and then they failed. That's that 160 clear level of failure. And then that's whole zone. Anything above 150 is difficult. And this most recent rally got above 150 for one day, and then I remember hearing something about somebody else Was it Tencent? No, somebody else. TikTok started a streaming music, or thinking about starting a streaming music. So TikTok has its weight. So maybe that was the effect of it entering yet another competitor inside this, the sphere of Spotify. Not sure, not the expert on it. So speaking of expertise, it's 50-51 PE, so it's not cheap. So there's definitely some froth to give out. But if you think about it, it's a subscription service, so that's what everybody wants these days, and it only sells at 4 times sales. I say only because that's about where Apple sells, 4 times sales, but Apple has a 20-some PE versus 50 PE, and it's a well-established company. Not comparing them apples to apples, just comparing them in absolute terms. All right, so from here, I still don't see evidence of why I should see 150 right away. So I have to get more granular. I'm going to go to a 2-hour chart. So now I see a little more clarity. So this is good enough start. I can drill down and share a little more finite information, but this gives me a number I can share with you on Spotify. So again, I'm going to mark it up with my Scratchpad here, courtesy free of Windows. All right, so this candle right here matters on this time frame. This is a level that was a failure here back in whatever 19th, not too long ago, and here we are. You know, in the last 3 ticks, so 6 hours ago, it also topped out there. So if I were to put an alert, I would put it at that number, whatever that number is. I'm going to say, what, 142.40 or 143.40. We'll go find it out after I get out of this window. And it's not a coincidence. If I look back, look at this. This number is exactly that number. So this is not a coincidence. And look at this. Remember Doji? This is the mother of all dojis. I don't know if they call this one a rickshaw or not, because it looks like a rickshaw where you get... Anyway, so for that period of time, 2 hours, they opened here, they rallied to here, and then they sold to here, or vice versa. They came back and stopped at the same place. So muscle memory. This one right there, and this one right here, and again here. Coincidence, you know, if you believe in coincidences, go ahead. Not me. And this is a zone where this guy failed. So this was a very big catalyst, regardless of what they said. I don't know what they said. But whatever they said was fantastic. So they left a big gap down here, and they pushed through, and that was the top of the headline at some point during the headline. 2 hours, that was the high. And this was the indecision level. Then they decided, you know what, we were right the first time around to react to here, so let's go. They came back and failed, and here they are testing the waters. So I'm going to look at this and say, okay, this line is important. So let's go find this line and see if we can put a number to it. 142.40, let's 142.50. So if I were to put a trigger and say, you know, I need to expect 150. If I'm looking to expect 150, I want them to beat this candle right here, because it's so close to that one, and that was the last failure really. So whatever this high was, see if I can see it. Oh, man, 142.60. So I'm going to put an alert at 142.60. And if you want to eliminate some of these fake outs, put it higher, so you'll be late looking at it. Then you'd save yourself. And I'm going to say, okay, what is it? 150 question mark. Boy, long day. Sorry about that. You can put whatever you want in here. This is TradingView, by the way. That's an easy platform. I think they have a free version, but you can also pay up for it. They open it for free to me, so it's kind of a sponsorship, but I don't sell it. So I do use it, though, and I share the charts on it. So, okay. So when that happens, I don't have to be looking at it, and then they tell me. So what's the carrot then? Somebody said 150. But to me, it's not obvious that they shoot straight to 150. There are a few numbers in between, like this number here, 143.25. This ledge right here is pretty important also at 144.50, and then you close the gap that they left open back on whatever November 19th. So is it 19th or 11th? 15th. So 147.50 would make sense, and then this ledge right here would make sense, and then this one right here would make sense at 149.80 before I can start looking at 150 and beyond. I see the carrot at 150, and I'll revisit it once we zoom out of this time frame. But so now it's a push-pull between filling the gaps above or filling the gaps below. They say gaps usually fill on Wall Street, but not every gap fills. Let's go back to, whoops, 1 day. So this is a daily. So will they fill this gap or this gap first? So far, on this time frame, the bulls are in charge. So as long as they stay above this line-ish, 137, I'd say that the buyers are in charge. I shouldn't say the bulls. The buyers are in charge. The dips are being bought. It's a matter of which breaks first, the necklines above or the necklines below. If they lose, so I'm going to put another alert down here to be fair for the sellers. Losing this one would open up the possibility of revisiting this line, 129.30, and filling the gap. So this is the range you're playing with. I'm glad somebody asked me this one. Thanks for pointing it out or reminding me of what I said back then so I can reopen this and do this little video. So we looked at it fundamentally. It's not cheap. So there is some froth to be let out, but it's not hideously expensive if it's a growth stock. You know, Amazon is at 70 plus on the PE size. Chipotle is the same way because they're perceived. See how I said perceived? Because I'm not being the judge. They're perceived as a growth company. Is this perceived as a growth company? It's priced as such, but it has so many competitors. I'm surprised they're still in it, but hey, great for them. So it's a battle between two lines. Which comes first? This is labored when the whole market is through the roof. So, you know, keep that in mind. If I'm long, I'm not panicking out of it, but I'm not rushing to buy it. I'd rather wait for the breakout and chase it than... Now, the big breakout would be up here. So once they break out of here, I can put another alert up here, and then I'll say, well, for here, it's probably 170, question mark. And I'll put CH to remind me that it's a cup and handle-ish of sorts. What is that? Okay, you want another lesson? Let's go. Let's go. I just watched a video on YouTube the other day about, what was it about? Review on some product I was looking to buy. And the guy kept saying, let's go. I thought it was catchy. So here's a cup-ish, right? The bulls got to here. The bear said, I'll send you back to where it came from. And they succeeded. Then the bulls got back to here, same place, neckline, right? The bear said, I can do this. I just did it, and I'll do it again. They succeeded, but half as much. Ooh, speaking of Fibonacci, is this half? Where's half of this? Somewhere on here, eyeball. So could they have, brought down to 50%? This is normal. If you have a rally, it's normal to give back half of it. And as long as they do this in some fashion and they get back to this neckline and break through it, and then make so they can see what I mean. So this is a cup and a little handle right there being drawn as long as this holds. So this is important. And then what's the upside potential? So the technicians will draw it way better than I do, but I can tell you that it's going to be big. So something like this. So the target would be somewhere up here. You say, whoa, that's impossible. It happens. So once the technicals take over, I don't stand in their way. I know that there'll be hideous resistance up here because of this prior failure, but eventually this on paper should be the target. So why fight it? If it's going to happen, just let it happen and then see how you can trade inside of it. I'm going to reset it. Sorry about that. This one thing that I haven't figured out how to do in TradingView is reset the chart I'm looking at. I have to change tickers and then come back to it. So this was the failure. This was the trigger. This was the failure. This another resistance point at 168 and a whole cluster of resistance up here. Okay, so the answer to the question was just, should we see 150 next? Like, it's not imminent according to the charts per my eye. I'm going to go down to a 15-minute increment. I still want to see that same orange line. Okay, so it's not imminent. I would rather wait. I tell you one thing, is for by any miracle it goes above that and closes above that, it's probably worth chasing because it's going to go a lot higher. Back to Fibonacci, I'm curious. What is the Fibonacci, oh my gosh, Fibonacci retracement? It's a mathematician that figured out some ratios that he kept seeing over and over and over. I haven't verified his work, but I can tell you every time I pull up this Fibonacci retracement. So I pick up the last extension lower, and this is the 50% of it. So on the way back, they took back more than 50%, and now they came back to 50%. So coincidences, again, don't care. I just look at them on the charts and trade them as such. And my son decided to start working on this truck. Hopefully you can't hear it. It's a very loud truck. All right, so another way of looking at things is trend lines. I like levels more than trend lines. So when people see a breakout of a trend line, like a descending high, lower high, however you draw it, this way, that way, they chase it to an extension way up to here. Valid. But this, I've fallen for more fake outs that way than chasing levels. I like to break through a level horizontally, and if it matches up to a trend line, so be it. I did one in Snap recently, and it was a confluence of 3 trend lines in one, that white circle, and we made bank on it because it was a confirmation of an inverse head and shoulders, the blue stuff. Descending channel, long-term channel from the all-time high, the yellow stuff, and the horizontal level of this stuff. And I thought the breakout was going to be tremendous, and I anticipated it and bought calls and shared it, and it was a huge. And I noted it on Twitter, or StockTwits, so Twitter, that 18 can come fast, and I was mocked. And guess what? 18 came. I said 1820 could be the target, and it hit 18 almost exactly to this target. So technicals do work. I don't ignore them. I don't spend a lot of money anticipating them, but I do use them to chase and or manage open risk. So in this case, again, to answer the question, I don't anticipate 150 until I see the triggers. The first trigger I see is right here. The second one would be here to fill the gap. Long answer, but I think a whole bunch of lessons in there, at least my versions of lessons. So, take it. This is not a trade alert service here, but it is sharing the levels the way I see them in a chart that is popular out there. Nick signing out.